Imagine you're a young professional. You've nailed the interview process and you're staring at a job offer. It looks great, but the compensation section includes things like stock options, a 401k match, and various health insurance plans. Suddenly, figuring out the real value feels like trying to solve a complex equation. This is where a good financial advisor can be incredibly valuable. Taylor, in this situation, what would be your initial thoughts and questions?
Definitely exciting, but also a little overwhelming. My first question would be, like you hinted at, how can an advisor help analyze the total value of a compensation package beyond just that base salary number? It's clear there's more to it, but I wouldn't know where to begin dissecting it all. And then, connected to that, what are the key things to even consider when looking at stock options and all those different benefits? Health insurance alone can be a maze.
Absolutely, Taylor. Sam, could you shed some light on these questions? How does a financial advisor approach this kind of compensation package analysis?
A good advisor starts by looking at the whole picture. The base salary is just one piece. We delve into the details of the benefits package. For example, with health insurance, we'd look at premiums, deductibles, copays, and out-of-pocket maximums to estimate the potential annual cost for you. Then we compare that with other available plans, factoring in your health and anticipated needs. This helps quantify the value of the healthcare benefit.
So it's about assigning a dollar value to these often overlooked parts of the package. That makes sense. But what about those stock options? They seem so complicated.
Let's start with a simple example. Imagine the company offers you 100 stock options at a strike price of $50. This means you have the option to buy 100 shares of company stock at $50 each, regardless of the market price, at some point in the future. If the stock price rises to, say, $75, your options are worth $25 each. The $75 market price minus $50 strike price, a potential $2,500 gain.
It's like getting a coupon for future stock purchases, but the discount gets better if the company does well, right?
Exactly. Now, a more complex scenario includes vesting schedules. Your options might vest over 4 years, meaning you earn the right to 25 options each year. This encourages employee retention.
Doesn't vesting encourage you to stay with the company and benefit from its potential growth over time?
Precisely. And a counterexample would be if the stock price stays below $50. In that case, the options are worthless, but you haven't lost any of your own money, just the potential gain.
So, Taylor, do you see how understanding these seemingly complex elements can help you assess the true value of a job offer?
Yes, absolutely. If I understand correctly, an advisor helps quantify the value of benefits like health insurance and helps decode potentially confusing things like stock options, allowing me to compare offers apples to apples, even if they're structured differently.
Exactly. Sam, anything else young professionals should be aware of in these scenarios?
Yes, don't forget the 401k match. It's essentially free money. If the company matches 50% of your contributions up to 6% of your salary and you contribute 6%, they're adding 3% to your retirement savings. Factor that into the total compensation value.
So, the key takeaway here is that a job offer is more than just the salary. Benefits, stock options, and retirement plans are all crucial pieces of the puzzle. Taylor, any final thoughts?
I think this highlights the importance of seeking professional advice when evaluating job offers. It can be hard to see the full financial picture on your own, especially early in your career.
Absolutely. Don't just focus on the base salary. Research the value of benefits and seek expert advice to understand the full compensation picture. This will empower you to make informed decisions that set you up for long-term financial success.